What up, YouTubers, day traders, and market participants? We are back with another video. This is going to be a separate series. It's going to be Educational Saturdays, guys, where I'm going to try to give you guys some education and look forwarding to helping you guys become better traders, better investors, overall helping you navigate the markets better day by day. So, if you're going to find anything value in this episode, I do hope that you like, comment, subscribe, join the family, help me out with these algorithms, show me some love, right? So in this video, we're actually going to go over candlesticks. We're going to start from the basics. Candlesticks. You don't need to know all those chart patterns. I'm gonna pull up a bunch of charts and it might be a little bit too much, but by the end of it, I'm going to explain the exact importance that you need to look for in these candles and in where at. So it's gonna actually be easier than it sounds. Just stick with me. But without further ado, let's get into the video. All right, so let's just basically describe what a candlestick is. There are four main points to a candlestick. It's the opening price, the closing price, the highest, and the lowest, right? And how they are formed within whatever time frame you're looking at will represent the candle. That's how the candle will end up showing to you in a visual aspect of four data points, right? And each candle, depending on what chart you're looking at, can represent a day, can represent 1 minute, can represent 4 hours, or it could represent 2 minutes. You can kind of build your chart however you want to build it, and that is specifically due to your time, basically due to your time approach on the market. If you're a day trader, you like the 5 minute chart, the 1 to 5 minute chart. If you are a swing trader, you would like the daily chart and the 5 minute chart or 15-minute chart or even the 4 hour chart. It allows you to kind of home in and not see all the noise, right? So we're going to get into that too. But first, let's just talk about real quickly the candlestick we have here. All right, so here is the opening price you can see. So basically, kind of where the body starts. And on this side, for a negative, when price action is coming down, you actually have your opening more at the top here. So at one point in time, this basically, whatever hour or whatever time frame you're looking at, this is when the candle price, whatever price is right here, is where it was. And at some point in time, that price got all the way down here. And then at some point in time, it went all the way up there. But then at the closing time for that 1 minute, 5 minute, 10 minute, whatever, or day, it stopped here. Same thing on the downward is it opened here. At some point in time, it went up here. And then at some point in time, it went all the way down here to the lowest. And by the end of whatever time frame you're looking at, it closes here. So some wild moves could be you open here, you go all the way up here, but then you go all the way down here, and then you end all the way back up here. That is possible too. That is the least case scenario. And if that does happen, it's more of like a daily chart because you can see that in a minute too. You really can see that in a minute chart. It's just if you see that type of action, that means that means it's very volatile. But if it still closes like this, it's still bullish. And if it closes like this, it is bearish. That is the main takeaway basically from the candlestick here and also the opening and the wicks. I don't ignore the wicks, but the wicks, if you can decide to ignore wicks or you can decide to implement them in your trading. I would say they both have value at certain points in time. My cat is messing with my legs. At certain point in times, they all have value, depending on where you are in the chart, and that's going to be for a separate video because where you are in a chart These candlesticks have more importance, right? So here on the right hand side, you have a bunch of basically bunch of patterns, and I don't even really look at patterns anymore, to be honest. It's really more of what was the last thing that happened and who overshadows who for the price action is kind of how I come to my conclusion. So let's go ahead and jump into the next photo. All right, here's our next photo. So basically, what I want you to take away from this image are there are there are four candles that I really, really love to start my plays and finish my plays, right? So I like to start my plays when I see four types of candles. Here's one of them. I just put up five. Huh, my bad. There's one of them. That's one candle I like to see. Here's another candle I like to see. Here's another candle I like to see. And here is another candle I like to see. So this candle and this candle are good candles, but I'm going to have a better representation for you in the next slide. But these candles on the far left and far right are your most important ones, in my opinion. They basically say, boom, the Bears are here to play, the Bulls are here to play. It's solid momentum from start to finish. That means there's most likely going to be follow through. Not always, but the probability has increased when you see positive, strong, fluid momentum in a candle straight up and closing at the high. Usually, you're going to get some follow through in that continued direction. And I have examples for you that just literally happened this Friday, yesterday, um, that I can show you guys with well known stocks, right? I'm not going to cherry pick them. I'm just going to go straight into the charts. These two right here, let's jump into why I like these two on this particular spot. I'll show you. So, here are the reasons I like those other two that I showed you. One is basically the hammer candle when it looks like this remember, so for this candle here, we started here, we went all the way down here. We came all the way back up here and we closed right here. What does that tell me? That tells me that that it went down first, but then it was met by buyers and they pushed it all the way back up and got it above where it started. Also shows positive, strong momentum. Also shows momentum. Positive would be bullish, negative would be bearish, right? So it just shows you solid momentum in a clear direction. That's what we like. We don't like indecision candles. Indecision candles, depending on where they are, can be very important. It just kind of consolidates the trend. But I do like them more when you have either an elephant candle or a very strong, solid bull candle or bear candle, right? So why? So basically, here is on the right hand side, it shows you exactly what happened with price. It started here, came all the way down, and went all the way back up. So if these candles represented a day right here, then each of these could be an hour. And basically, by the end of the day, it's all the way back at the top. So this candle would represent the day. Or if it was a 15-minute candle, then these would represent the ones, 5 minutes, whatever. You kind of get the drift. So now for the downward candle, where it shows you that price started off for here, for this red is actually, and if the colors matter a little bit, but the colors actually help you understand more when you have your location on the candle on the chart. And that's, like I said, that's going to be part two. That's the second part. And I don't want to overwhelm everybody with the information that I'm giving you guys. But this candle basically opens up here at the top. Then it goes all the way up here at one point in time, but then gets rejected and comes all the way back down past opening price and closes on the low of that candle. That means the momentum has shifted. That means that first the Bulls were in control, and then the Bears took over at the top and brought it all the way back down, and even past where Bulls were getting excited about the price. The Bears actually got past that. And then you could see how that psychologically messes with a lot of people's head when if you think right now is a good price, it goes up, you're happy, but it's not for too long. It's short lived, then that gets reversed and now you're down. It'll create a psychological thing in your head that says, oh, I might be wrong. Let me get out of it, which increases the selling. And then also vice versa, if for the first candles, right, you buy in, then the price comes down. You're like, oh man, I made a bad decision. But then, not quickly, it comes right back up and then you're like, oh wow, I actually made a really good decision, so let me pile more money into here and keep pushing it up, right? So that's basically how these candles can relate to the psychology of when you're trading and how other people see those candlesticks. So let's go over some real charts and show exactly what I mean when it comes to those candlesticks. All right, so here is the first chart we're going to look at. It's SMR. This is Thursday. All of this data right here is Thursday, and I'm going to just show you what happened on Friday. This is what happened on Friday. This is the first 5 minutes of the day. What is happening here? It is a price opened up here, then it went all the way up here, but then it went all the way back down here and closed very close to the low, right? So a lot of momentum shifted. At first it was green, then it went red, then it continued red. Not only did it continue red, it broke yesterday's low. Not only that, but it also, look how big this candle is. Look how giant this candle is. Show me another candle that's just as big as that one on this chart. It'll be right here. Again, the opening. So it looks like you could kind of fairly say the the selling pressure is on for SMR the last 2 days because this was Thursday, Friday. But it also means that maybe an algorithm has started to trade this, and this is basically where it first kicked in. They said, "Hey, you know what? And we can't make these candles, guys. These big, large candles come from institutions. They come from the whales on Wall Street. They have the ability to move these stocks. We don't have that ability. If I, how it doesn't matter this is a lot of money at play here when you see bigger size candles. So what do? You join the momentum. You don't fight the momentum. You have to be very careful. When you fight the trend, it hurts. The trend is your friend, and they say that for a reason. But when the trend starts off with a big, juicy candle in either direction, you want to get into that as quickly as possible. So here's your first example of a big, strong bear candle. Here it is right here. So boom. So as soon as this is the opening 5 minutes of the day. So that's what? So if you're Eastern Standard Time, that's going to be 9:30 to 9:35, right? So as soon as 9:30 9:30 55 or 59 seconds. I was trying to type because I like to make my decisions 30 seconds until the candle closes. Why? Because the candle's not going to change its nature. If it's a 5 minute candle, it's not going to change its nature in the last 30 seconds. If it's a 1 minute candle, then 30 seconds is your whole half of the time. So the whole thing can change in the next 30 seconds. But since it's a 5 minute candle, I'm not buying at minute 3 because then I got 2 more minutes for it to change its mind. I'm not buying at minute 4. It has 1 minute of time, so yeah, you can, but I'd rather just be a little bit more safe and wait that extra 30 seconds. So by the last 30 seconds to 15 seconds of the candle is when I make my decision to take the trade. So say we take our trade here at 9:34 and 30 seconds, right? So we're in here. Boom, we're in here. Now what's the next candle that happens to happen? Bam, continuation. Oof, I like that. It has continued. It's gone down just a little bit. You could have already made your day worth of money. That next 5 minute candle just That easily could have been your day, depending on your size, blah blah blah. That is your risk management, whatever it is. The fact is it was well placed, very big candle that had follow through. Not only did it have follow through, but let's see. Oops. Uh Oh, that's the zoom in feature. Let's go to the next candle. All right, next candle. This candle is equally as strong as this candle. So I would actually be kind of worried, but I'm not too worried. Why? Because this big candle. So when you have a big candle, you have to think of it this way. Just like with this one, you have to think about that energy is being pushed this direction. So it has to climb back into the energy of this giant candle. And if it can't get through that energy, it will get pushed down, right? So this is my big candle. This is my big energy that I'm focused on. So if we were to get back up here and I took a loss from here, this would be a pretty big loss. That would be a pretty big loss. I would maybe hang out halfway through this candle, and if it got all the way back up here, I would be worried. So say we're not worried because we want to hang out in here. We're not worried. So let's let the next 5 minute play out. Boom. I'm still not worried. Why? Because we did not come to this middle zone. Let's see what the next 5 minute brings. Bam! Continuation. Ouch. That is solid continuation down. Now, honestly, boom, boom, boom. That is a done. That is done. So that's 5, 10, 15, 20. That's 20 minutes of your day, and you just completed your day in 20 minutes. Depending on your risk to reward ratio, that's a different part of the journey of trading. But as the candlesticks are concerned, this is the main takeaway. These big candles give their energy and push their energy to the right of the charts. And if those other candles don't look like they can match that energy of the big player, then you can see some continuation. So that's basically it for this one. We can kind of see that the whole day, I'm pretty sure it's going to be, yep, continue selling. It can't get past the blue and it just keeps going down. So what could you have done? As soon as that first candle showed its head, showed its face, bam, I'm in here. I'm in here, right now, waiting. If it comes back up here, I'm out. You can't win every trade. Cannot win every trade. Goes up, it is what it is, but it doesn't because it does continue the probability aspect of the trade. It's more probable that it will continue then it won't. As the day goes on, this one's decent, but it's not as big as these ones, right? It's not as big as all these bad boys over here. So it has still some follow through, but you can start seeing the follow through get slower and slower. But that's also as the day goes on. That's for another video. So much when it comes to trading. But let's stick to the candles for this explanation. Let's go over Tesla, see what Tesla did on Friday. All right, guys, here is Tesla on Friday. Now, look at this. This is the first 5 minutes I get on Tesla. Nice, huge green candle right off the gate. It looks bigger than the rest of these. So what does that tell me? That tells me this is a big player at heart. There is a lot of momentum going into this stock in this first 5 minutes. So I jump in. I don't care what else happens. I'm in this position. If it comes back down to the middle spot, I'm out. Let's see how it continues. Oh, that was two. Oops, that was the wrong button. All right, so this is how it continues. It gives us a followed through candle. And it would be scary at first because you would be losing money. Because if you got in here around the close, the next 5 minutes, you would have been down for a little bit, but then you would have reversed and you would have saw another opportunity to get in because now you have another opportunity where first it was red. Now it turned green, which shows that the bulls have taken back over. And then you get another push up. Does it stop there? Let's see. All right, indecision candle. Basically, that doesn't that. So if we get an indecision candle here, I'm not gonna give red the the advantage. Why? Because green has not been taken out yet. I'm not gonna favor the red until all of the latest green gets taken out. So the red comes into play here. Let's go to the next. Ah, green's back into play. I like that. That's strength. Does it continue? Yes, it does. Does it continue? Yes, it does. Absolutely crazy. Now, ooh, here's a good point. Here's a good point here. Now that we have red, red has officially taken over green. Odds are it will continue, but since we're already up in this big move, it's probably just a pullback, which we'll get into that also for another video. I just want to see what happens here. I believe we will get a little bit touched down here, but the bulls are in town, so I would not short this. This would be a good opportunity to wait for one more candle, and if it's red, I would get in. Let's see. Let's see what happens. Dang it. I keep clicking that one. Oh, red. Bam. Probability was it continued, which it was. That would have been a quick scalp, you got to know what you're doing to make money there. Quick scalp. I like this red right here. I would be considering starting to get ready for the second leg. Up, there it is. Green. Boom. As soon as this candle finishes, this is what 10:15. That's the 10:15 candle. So if the 10:10 to 10:15. So that means at 14 10 14 30 to the last 30 seconds of this candle. I'm looking to buy and get into Tesla. Let's see what happens after that. All right, indecision candle. I'm not making a move. As soon as 10:20 comes around, 10:19 30, I look at it. Okay, not making a decision yet. Ooh, we're up. Is that enough to take profits? I don't know. But this candle would have freaked you out, right? If you were here, it would have been red, and you would have been like, oh man, red's about to take over green again. And then you jump out of the position. But wait, the candle never finished closing. It's a 5-minute candle. Wait for the 5 minutes to play out. 5 minute plays out, we're back actually above everything. Okay, wow. Let's stay in that. Next one. Ooh, another green shot to the high. Do you understand? I'm not looking at anything else but the candlesticks. The candlesticks tell a story. Strength. It went red, but now it's green. Strength. Red showed its face. The bears showed their play. They showed how strong they are at this moment. They are undecided. They cannot do anything. Bulls come back, bulls come back, bulls push it up. Finally, they get a little bit more strength, met by more bulls at a moving average, which pushed it up even higher. All right, guys, that's going to be it for this video. I do hope that you liked, enjoyed this candlestick review. Remember, there are only 4 real candles that I really, really like to play off of. That is strong momentum bull candle. Start here, end here, very green, solid. A red candle, start at the top, pushes all the way down, closes at the top, very strong. These 2 candles have to be bigger than all of the other candles. I don't care if it can have a solid move from the bottom to the top, but if that candle looks like the same candles it produced the last 2 hours, I don't care about that candle. I want to see that this candle stands out. This candle is massive. It's bigger. It shows me the big people are here to play. So those are 2 candles, and the other candle is a reverse on energy, basically a hammer candle or I forgot what the downward one is called, but basically it just shows that the momentum, whatever time frame you're in, started off strong in one direction, but then got reversed and got basically tricked into. So most of these times, those are your traps, your bear and your bull traps. They come from these candles at key areas, right? So I hope you guys find value in this. If you did, like, comment, subscribe. If you use candlestick chart patterns for anything other than what I've explained, I would like to know. You can go ahead and leave me a comment on that. I do want to engage with you guys. I do hope you guys have the rest of your weekend, and I will see you guys in tomorrow's video.